Hello everyone, welcome back to FCTA weekly analysis. And this week I would like us to focus on just three currency pairs, and that would be Australian dollar USD, Great Britain pound USD, and NZD USD. In other words, we're focusing on AUD USD, the Guppy, and Kiwi. Why did I select these three trades? Of course, we are always looking for a trade that will give us a higher volatility of the week. So, and using our forexfactory.com, we filtered through three currency pairs that will provide that such volatility for us. First of all, we'll check the economic calendar that we're expecting right from March 1. And of course, happy new month in advance. I'm sure when you are watching this video on Monday morning around 12 a.m, because I'll upload around 12 a.m to 1 a.m, I'm sure we'll already be in March 1. So happy new month, wishing you a prosperous month ahead. So as I'm saying, this is what we'll be expecting. Of course, Monday is always a silent week. Monday is always a silent day rather, because there is not much more high impact economics except maybe GBP, manufacturing PMI, which might not really move the market as such. Okay, so but on Monday we are expecting USD, ISM, manufacturing PMI, producer manufacturing index, and where the forecast and the previous are the same, so the actual will determine the movement. We also have the Lagarde, the European ECB, the European Central Bank. European Central Bank president is Lagarde. Of course, she is to speak, and her speech will give us the clue on the monetary policy and fiscal policy of Euro. But on Tuesday, we should be expecting high impact news on AUD, that is Reserve Bank of Australia interest rate statement. This will determine the fate of Australian dollar on Tuesday. Also, we should be expecting cash rates on Australian dollar, and of course on Tuesday we are expecting Canadian dollar GDP. Okay, but I'm sure that will not move the market as such. While the AUD quarter to quarter basis will be released on Wednesday, the forecast is pointing to the fact that the GDP will decrease, okay, to the previous 3.3. So we should be expecting trader sentiment to be short on AUD. And on Wednesday again, we're having GBP annual budget release, high impact news. Anywhere you see red color is high impact news, okay. Brown color is medium impact news, while yellow color is low impact news. So also we're going to be expecting the USD non-farm employment change, ISM service PMI, and crude oil inventories, MPC member Terreno speak, okay, for GBP. And for NZD we are having Reserve Bank of New Zealand governor all will speak on Wednesday, while on Thursday we are expecting high impact news on USD, where the chairman Powell will speak concerning the currency pair fit. That's why it's concerning the USD fit and interest rate and fiscal policy. And on Friday we'll be having USD hourly monthly earning, non-farm employment change, and unemployment rate, which will all determine the movement of the currency pair. That's why I only pick three trades: AUD, USD, AUD being that we are going to be expecting a news on AUD on Tuesday, high impact news, and on Wednesday high impact news for AUD too, and for NZD USD we are going to be expecting high impact news on Wednesday, while for GBP USD we are going to be expecting high impact news right from Monday to Friday. So I will first start my analysis with AUD USD, okay, to see the probable direction of the currency pair, and then in the consequent videos I will be showing the forecast of GBP USD and NZD USD. Of course, last week, especially last week from Monday to Thursday, let me just from Monday to Thursday, or from Monday to Wednesday, USD has been losing ground. However, on Friday, USD surprised us with a strong move. Okay, in other words, USD appreciated very strongly on Friday, and that make our Friday trade to 8 stop loss. So today we are going to see the fate of AUD USD and the direction where it's likely to go. Of course, looking at the H4, squeezing the chart, we can see a major support here at this point. A major support at this point, in which the price broke very seriously. Okay, we can see the price breaking on the H4. The price broke through the support. The bears broke through the fortress of the bulls, that is support level, downward. So the RSI is in oversold, the stochastic is in oversold. Okay, and I think there was a day during my analysis I used my Fibonacci retracement on the daily analysis to look for probable retracement of the currency pair. Okay, if you look at this Fibonacci retracement level, we can see that price has actually broken through the zero level, so price might actually retrace to 23.6% Fibonacci retracement, in which is another support. Okay, a support has been broken on this support at 0.7792 has been broken, so we should expect the next support to serve as our pullback level, where price might reverse. So this is the next support level in line with our 23.6 Fibonacci retracement. Of course, remember that Fibonacci is subjective and not objective. It depends on where place your where you start your retracement for your low and your high from. So I can decide to use another level where price has been actually ranging from here. Price has been ranging all the way from this point. It has been ranging, okay, but on October, if I'm right, 2020 October 30, price left the ranging zone and broke through the resistance, now support to the high. So we can place a new Fibonacci retracement. Of course, remember that the old Fibonacci retracement will place this is 23.6. This blue line is 23.6 Fibonacci retracement, where price could actually head to. So let's use our new Fibonacci tools to see a new concept of where price could actually retraces to, and that will Fibonacci retracement. Okay, so I'm taking it from here to where the price moved to, and that is here. Okay, and we can see that price, okay, it has not gotten there. Let me move it a little bit up. Is it up? Okay, yeah, it's there. So looking back at it, we can see that the 23.6 Fibonacci level was broken here, and the next support is 38.2, which I'm sure it will be broken to. Okay, so let's look at the 50 Fibonacci level. The 50 Fibonacci level is in line. Okay, 50 Fibonacci level and the 61.8 Fibonacci level. So because the 61.8 Fibonacci level and the 38.2 Fibonacci level are more common. So because the 61.8 Fibonacci level is in line with our blue support line here. I'm expecting price to retrace to this point before picking up momentum to the upside again. So this week I should be expecting more of appreciation of the USD. I'm expecting USD to further growth, and considering the fundamentals to the GDP, and the consumer spending of the USD increases also. And also there was a big push to increase the minimum wage of the United States to $15 per hour. Okay, so I'm just telling you the fundamental background. So okay, and also look at the RSI. The RSI is a little bit pointing down. You can see that the RSI is pointing down from the 70 level down to going to 30, and also the stochastic is pointing down from the overbought to oversold level. So we're expecting it to further goes to 30. However, there was a price pulling back from this previous stochastic level where it went up again. But let's see how it goes. I'm expecting price to really touch the 30 stochastic level. So if price should go down, then we expect our support to be valid at 0.73679, the blue line here, which is in line with our 61.8 Fibonacci level. Okay, now this is our structure on the daily chart. A bullish trade with a bearish retracement. Okay, so let's go to our H4 to see what is really going on. So on the H4 we can see that there was a channel for a minor channel formed that was broken. A minor channel was forming in which the price was a little bit ascending until it was broken. It was broken at this point. It was broken at this point. It was broken at this point. Yeah, it was broken at this point. Can you see? It was broken at this point, and then it's a major support was broken at this point, and price is heading down to 32.8 38.2 Fibonacci retracement. Also on the H4, the stochastic and the RSI are in the oversold level. So what should we be expecting on the H4 chart? We should be expecting price to retest the major support that was broken. That means we should be expecting price to retest 0.77982 here, so that the RSI and the stochastic will leave the oversold level up a little bit and then come strongly down. So we are expecting price to retest this support that is now resistance. Okay, the support has turned to resistance. We are expecting boost to retest this place. Okay, we are expecting boost to retest this place, and if they fail to, which they will fail, if they fail to gain ground to retain this particular point, then price will further push down to down. Okay, let me use D1 to see. Okay, down to the 61.8 Fibonacci retracement level. So also the RSI too should leave the oversold level on the H4 chart. Okay, you can see the RSI might leave the oversold level, as the stochastic might leave the oversold, and the RSI too might leave the oversold level a little bit. Okay, just for the retest of this psychological resistance and support pattern resistance now. So upon the retest, that is when you should enter a short trade. Okay, you should enter a short trade upon the retest of 0.77982, and then you set your entry point. Okay, let's go to the H1 to see more of price action. Tada! On the H1, it was actually retested on the H1. Can you see? On the H1 it was retested. Yeah, it was retested there. When it was broken here, it was retested there, and then it moved down, down, down. But I'm still expecting retest of this location. If not, if it's not retested, then the price should go down straight. But I'm expecting price to actually retest it. I'm expecting price to retest it because of this our stochastic and RSI. However, market is market. Anything can happen in market. So this is the point where it was retested on the H1. So I'm expecting a retest on the H4 too. Okay, this was the point it was retested, and then we can see a further fall in the currency pair. So a short trade upon the touch of this 0.778982, a short trade, placing your stop loss just here, and then your TP will be on the daily chart. The daily chart where we're having the 60, where we're having the 68.2. This point, this can be a long trade, okay, but if you want to make a short trade, then you can take your profit at 50% Fibonacci level. Yeah, okay, you can take your profit here. However, a good trade should be where we are going to be expecting a pullback to the 61.8 level, because this is the next support line. Okay, you can put it here. The 50% Fibonacci retracement is also a good risk to reward trade. Okay, but if you want to take a long trade, then it's better you move it here. Anyone you do, just make sure you play safe. I hope you learned something today. This will be the end of the weekly analysis on AUDUSD March 1 to March 5. Have a nice day. My next video, I'm going to give you analysis on GBP USD. So do take care of yourself, and make sure you rest well, and make sure you prepare for tomorrow's trade. Bye bye.